Hi everyone, welcome back to Sugar Mama TV, your financial coach, counselor and creator. Now whether you're just about to buy your first home or you're already in your first home, or in a home I should say, paying off the mortgage is one of the smartest things you could do for yourself, and I'll explain why. First of all, when you look at the amount of interest you pay each month, it's huge. If you didn't have a mortgage, you'd have so much more cash left in your pocket at the end of the month. Secondly, when you look at all the amount of interest you've been paying the bank for the life of the loan, it adds up to be a huge amount of money. For example, say you buy a house for $550,000 and you borrow $450,000, so you had a $100,000 deposit. And the bank puts you on a 30-year mortgage, and we assume an average interest rate of around 6.5%. Now, over the life of that 30-year loan, you actually pay over $573,000 in interest, which means that $550,000 home that you bought actually cost you over $1.1 million. Now, you don't have to be a slave to the bank, and obviously you're lining the bank's pockets in paying this interest, and yes, we have to sometimes borrow money to buy the things that we need. But if you have a mortgage and you live in that house, I recommend that you try and pay that off as fast as possible. The quicker you're out of personal debt, which is debt that's not deductible, doesn't give you any income benefits or any capital growth other than the growth of the property market, which is in relation to all the other properties anyway, but that's another story. Pay the property off as fast as possible. And then you can start looking at other investments opportunities that exist where you can further your financial freedom. So step one, keep it simple, stupid. When you see a bank, often they'll recommend all these bells and whistles, overdrafts, credit cards, and they'll sort of package it all up. You'll have an offset account, a redraw facility, all these sort of products that they attach and custom to your home loan. I personally don't recommend those. I say keep it as simple as possible. You should have one home loan, unless it's split, which is a separate conversation, and just try and focus on paying off that debt as fast as possible. Now, you definitely don't have to be a slave to the bank. A couple of simple tips and tricks can really help you pay off your home loan a lot sooner. And these are things that you can apply immediately. So, as I always say, let's get straight into it. 1, keep it simple, stupid. Often when we see mortgage brokers and the banks, they package these home loans for us that have all these bells and whistles. And yes, mathematically, they are supposed to work in helping us pay down our home loans quickly. However, from my experience in working with clients in debt reduction strategies, they don't work for everyone. Sometimes they can be incredibly distracting and they create a false sense of security and don't actually result in you paying off the home any sooner. I recommend trying to keep it as simple as possible. Have one home loan and work on paying that off as fast as possible. 2, know your numbers. Not only should you be regularly checking your internet banking for security, you should also know exactly how much your home loan is, and also be monitoring the amount of interest you pay each month. Because when you see that large amount of money that's costing you just to have a mortgage in place in the first place, that will hopefully be your motivation to try and drive down your mortgage and see that interest repayment getting smaller and smaller each month as you start paying more and more off the home loan. So that also gives you a good benchmark to work from. So for example, say on my home loan, my interest repayment is $3,000 a month. Each time I pay some money off my home loan, I'm going to go and look at that interest repayment and see that my repayments are getting smaller, my interest repayments are getting smaller and smaller each month as I'm servicing more of the principal and actually paying down the principal over time. 3, tidy up your budget. Go through your budget and your living expenses and try and identify some savings. Take those savings and then increase your mortgage repayments by that amount. So say for example, I decide that I'm going to be a bit more conscious when I go grocery shopping, not spend as much money on my local grocery store shop. I'm going to just buy what I need, and I identify a savings of say $50 per week. I would then go and increase my mortgage repayments by $200 per month to make sure I'm using those savings efficiently in paying down my mortgage. So really simple strategy, identify additional savings from your budget. 4, lump sum repayments. Now this is a really important strategy that you must use. You need to come up with lump sums amount of money that you can manifest and then use to channel towards your mortgage in paying it down. Now you might be scratching your head going, where am I going to come up with lump sum repayments? But this is where you should open up your mind to the universe and get creative. Now here's just a couple of examples you could use to try and manifest money. And you don't have to use one of them, you can use all of them if you want. So for example, you might decide you want to have a big garage sale and raise some money that way. Or you might decide to sell a whole pile of stuff on Gumtree or eBay. You might decide to take a second job on the weekend to earn a bit of extra cash. Or you might get a tax refund, or you might even ask for a pay rise or a bonus at work. Just try and manifest additional lump sums, and when you create and achieve those lump sums, throw them straight onto the mortgage so that you pay that mortgage down as fast as possible. Now, if interest rates go down while you're trying to pay off your home loan, that's fantastic. That's an amazing opportunity to try and pay off your home loan even sooner. So make sure your repayments actually stay at what they previously have always been, because that will mean that you're actually servicing more of the principal, actually paying it down rather than just servicing the interest. It makes you one step even closer to being debt-free and mortgage-free, which is such a powerful position to be in financially, and opens up a whole other box of tools that we can use to help create more financial wealth and independence for you. So very simple trick. Now if you can use these tips that I've recommended and manifest an extra $5,000 per annum in lump sum repayments, plus save an additional $200 per month in your budget, using the example of a $450,000 mortgage with an interest rate of 6.5% on a 30-year term, if you could do that, you would save over $239,000 in interest, and you'd be debt-free 11 years earlier than you would have been if you'd done nothing. And I guarantee once you try and do these things, initially it might be hard, and you might be sort of wondering where the next $1,000 that's going to come from. But if you just stick with the idea, stick with the strategy, and the universe will serve you and send things will happen and send money your way. So very, very simple. Do the best you can do. Don't be too hard on yourself, but just make sure you are actively trying to pay down the debt on your family home or on your first home, and don't be a slave to the bank. You don't need to be. You're perfectly capable of doing this, and powerful things are within your reach, I promise. So why don't you challenge yourself to paying off your home faster than the bank think you can? I really hope you found this video motivating and inspiring. I believe in you to be able to get debt-free sooner. It's a really powerful thing you can do for yourself, and you will never look back, I promise. So thank you for watching. Ciao for now, and I will see you in my next video. Okay, bye!